Hey everyone, and welcome back to the Your Money Your Life podcast. We're now on episode 310 of the pod. So make sure wherever you listen, you like, subscribe, 5-star rate, and review this pod. And we do this every week. So we're going to jump into it. The first thing we always start with is a market update. And we've been, it's been a weird, it's holiday season. Trading is not forefront of everybody's mind. Investing sometimes isn't the forefront of everyone's mind when we are in a holiday season. So let's talk about exactly what's been going on the past week when it comes to the market. First and foremost, we're in a new year. Obviously, we're in January 8th of 2026, which is crazy to think about. We are now in 2026. I don't know. There's some of you who may be listening for the past 4 or 5 years, right? And so we're in a new year. And if we look at year to date, what the market's done, we're up a little bit over 0.5%. So we're up a little bit over 0.5% to start the year. There's not many trading days in the year so far. So it's not really, obviously, it's not it's a small microcosm of what we've seen so far. But let's pull the chart out. 6 months up over 10%. 1 year up over 17% on the S&P 500 ETF tracker, and 5 years up over 80% on the S&P 500 tracker. So QQQ Dow also should be up, right? Let's take a look at that. Love to see how those are trading. Um, and yes, year to date, the Dow Jones is actually performing slightly better, up over 1.5%. And tech year to date, it's about flat, right? A little slow starts the year. But again, we've just kicked off the year, so we're just getting things started. Big things that are trading or big themes in the market right now. There is, of course, geopolitical and political things going on that, the market hasn't shown to have any fear of it. The defense stocks have rallied for the administration actually increased the budget, the defense budget by about 500 billion, if I'm not mistaken. Um, it was actually 2027 has a massive increase of 901 billion approved by Congress for 2026. So the defense budget was called to be at 1.5 trillion in 2027, and that's a 901 billion increase from 2026. So that's the jump from 2026 to 2027, excuse me. And so that's a massive 901 billion dollar jump. The S&P 500, we know again is trading fairly well to start the year. We've just started the year. The markets haven't really blinked when it comes to the geopolitical risks out there, growing tensions, different things that are happening, across the globe. The market hasn't really so far blinked. Defense stocks, though, are doing well. Defense stocks, nuclear stocks, those are going to start to continue to increase as you potentially see us taking more of a position that is offensive. We'll see. We'll see in that regard. Um, so that's the biggest thing in the market so far. Again, nothing crazy. Last year was really strong. The last 3 years have been really strong. So that's the big thing there. Layoff plans for companies are getting better. There's a glimmer of hope for U.S. workers. This is an article that says U.S. companies just announced just over 35,000 job cuts in December. That's the lowest figure in 18 months. And this is per outplacement firm Challenger Gray and Christmas. At the same time, those companies said that they would add 10,500 new roles. That's the most since December 2022. So are companies getting a little bit better when it comes to jobs? Is everything fine? People said that they're 23, 24, 25, sometime there'll be a recession, but we didn't see it. Or we didn't see a crazy amount, right? We did see some contractions in some key performance indicators for the economy, but we didn't see an overall draw doom that many predicted. Even we thought we'd see something at that some point, but we didn't. Um, and so, yeah, they're saying, hey, companies are going to plan to potentially hire up and pick up hiring. They predict growth, which is a good thing. With said more economic news, the U.S. trade deficit contracts the lowest level in 16 years. So the U.S. trade deficit shrank in October to its smallest margin since 2009. It's surprising economists as tariffs contributing to a drop in imports. Thursday's Commerce Department figures, which were delayed by the government shutdown, showed the gap narrowed 29 billion. far smaller than a Bloomberg panel of analysts predicted. Imports fell 3.2%, while exports rose 2.6%, with whipsaw and tariff announcements leading to a stockpiling of non monetary gold and pharmaceuticals. So they're pretty much saying, hey, we are closing the trade deficit within domestically. So we're showing that we are taking less goods from other countries and they're buying more of our stuff as opposed to past times. So, if you're thinking about, actually your coffers, your treasuries, of course you want to sell more until you realize that those coffers, those treasuries, those funds, and then on the other hand, buy less. And so that's look what's happening. Like the trade deficit for the U.S. is starting to shrink. That gap is starting to come together. And so what exactly is driving that is, of course, some of the tariffs play a role. On a country basis, if you look at it by country, the largest deficits were recorded with Mexico and Taiwan and Vietnam and China. The trade gap with the EU narrowed sharply to 6.3 billion. We had surpluses with Switzerland, the UK, and Brazil. So we're good trade partners with Switzerland, the UK, and Brazil. But that's a good thing to note. We're starting to close that trade deficit. That's not a bad thing, I wouldn't say. Let's go back to jobs. These are America's 25 fast growing jobs. AI engineers snagged the top spot on LinkedIn's jobs rise list, the data backed ranking of the 25 fastest growing jobs over the past 3 years. And this is as job seekers navigate an increasingly uncertain job landscape. So these are the fastest jobs. Let's see. I actually want to click in to this report and get the 25 fastest growing jobs for you guys. Number one is AI engineers. We'll go through the top five at least. We all know artificial intelligence engineers, they're developing and implementing AI models, get paid handsomely to do so. AI consultants and strategists. What does a consultant and strategist do? Help organizations plan and implement AI technologies to improve operations and reach their goals. New home sales specialists. Interesting. New home specialists guide buyers through the purchasing process for newly constructed homes, from conducting property tours to managing sales transactions. Interesting. Data annotators. So, data annotators label and review data using detailed guidelines and quality checks to ensure accurate data sets for training AI. So, that's three out of the four are AI related. AI and ML researchers is number five. It's artificial intelligence, machine learning researchers design and test new models and algorithms. So the top four out of the top five are AI related. So that just gives you a note on what people are thinking going forward, what jobs and shifts and roles are going forward. And it's all AI. It's all AI, folks. Speaking of an AI company, Alphabet's market cap eclipses Apple's after a sharp stock rally. So Google parent Alphabet market capitalization leaped Apple's for the first time in 6 years. This came on Wednesday for those listening today, becoming the world's second largest company. After a sharp stock rally, the search giant's market cap ended at 3.8 trillion. Meanwhile, the iPhone maker closed at 3.84 trillion after a recent share slump. Yeah, we're very bullish on Google and what's going to happen with Google in the future. I said this many years ago about the data that Google will have and how they will potentially be one of the winners in this race. And they're starting to put together that data to create usable tools, AI language models, Gemini 2.5 chat models to really, in a powerful way, make people more efficient. And so, yeah, I was early, but I was right. And so that stock is moving in kind. If you look at the top companies by market capitalization, Nvidia at top with 4.6 trillion, Alphabet 3.89, Apple 3.86, Microsoft 3.59, Amazon 2.58, TSMC 1.65, and Meta 1.64. Broadcom, Saudi Aramco, and Tesla round out the top 10. So pretty much tech. Okay, we've always been a heavy proponent of tech. It just makes the most sense. You want to be invested in tech. These companies are just going to continue to eat up market cap, eat up share, eat up pretty much everything in its path. And you don't want to be in its path. I'll tell you that much. So that's another pretty much easy graphic to see what's going on, going forward is we're heavy tech, we're heavy growth, and that's where you'd want to be. The administration did talk about a $2,000 tariff dividend. So let's get an update on that. So President Donald Trump said this week the U.S. collected more than 600 billion in federal tariff revenue. Last year, they floated the idea of sending out $2,000 checks to Americans. The Supreme Court could issue a ruling on whether Trump's tariffs are legal as soon as Friday. So let's see. In an interview on Face the Nation with Margaret Brennan last month, National Economic Council Director Kevin Hassett said, I would expect that in the new year, the president will bring forth a proposal to Congress to make that happen. So they're going to bring a proposal to Congress to make that happen versus just doing it directly. Um, they also said the president's tariffs are raising historical revenue for the federal government, and the administration is committed to putting that money to good use for American people. So it sounds like it's going to be more of a proposal to Congress versus just an act done. So we'll keep our eye on that. So that's interesting. And there wasn't much else news. Again, we're starting the year off, and I'm sure people are just getting back in the swing of things. But I did post something on TikTok about the ease of starting your own business. I think I've gone through this before, but we want to go over it again as a refresher. Starting your own business is really, really easy to do. Registering it is also really, really easy to do. The first thing you're going to do, of course, is pick your registration type. It makes most sense for solopreneurs, freelancers, single member people to just create an LLC, right? Like that's the easiest. You don't want a corporation, S corp. You don't want to do any of that. Nonprofit. Don't worry about the doing business ads. You could still do this with the LLC, but you want to start your LLC. What is the name of the business? That's easy for you to figure out. You'll type that in. And once you have the business, you don't need, as they say here, to add LLC. If you're still thinking, you don't even have to add it, even if you've created an LLC. It's going to be self explanatory in that part. Of course, you'll choose your location, right? And for most people, it's easier to just choose your home domicile if you have an internet business where you're located. If you have a brick and mortar, where your brick and mortar is, or at least your head corporation is, your actual headquarters, and make an easy selection there, which is fairly easy, right? And then back, another thing about the name, when you choose your name, they'll do a check for you to make sure there's no other businesses in the state registered with the same name. And now you'll get to the actual part of finding the in with LegalZoom. Again, this is not an ad for LegalZoom, but that's what I've used for a lot of different registrations. You'll be able to choose a package which will allow you to get an operating agreement, which helps you set the guidelines to settle disputes, an EIN, and also a terms articles of organization you'll get as well. And again, it's only going to cost you a few $100. If you're really invested in yourself, or really thought you wanted to do something, there's not much time left. Now is the time to do it, to give it a shot, because it only gets harder to start something as life goes on. So definitely want to do it when you can. And again, a few $100 investment, you spent much more on a bunch of other things that you don't even remember, I'm sure. Super simple to do that for yourself, and for your family. If that is your goal in doing so, that would be what you'd want to do. So, folks, we have gone over pretty much what we wanted to today on the Your Money Life podcast. Again, we're doing some good stuff. We're getting things organized with content. We'll keep those things updated for you. But make sure you tap in with us. Make sure you share this with your family and friends. We will see you next week.